My name is Ingrid Innes, and I'm the Managing Director and CEO of ICBL. It's indeed a pleasure to have this opportunity to report to you on the company's fourth quarter and annual operating performance for period ending December 31st, 2013. I'm happy to report to the existing and potential investors that we've had another successful year's performance at a time when we celebrate 35 years in the business. Notwithstanding this achievement, we've had to operate in a challenging economic environment stemming from the global financial crisis that we continue to face. Let me give you some highlights to start. Our total assets increased to $422.7 million compared to $416.3 million in 2012. The return on equity for 2013 was 10.25%, up from 8.26% in 2012. Net income after tax also improved from $12.2 million in 2012 to $14.8 million in 2013. The operating results were also enhanced by a release in actuarial reserves due to our improved claims management and continued investment in technology for improved efficiency. Our earnings per share improved from 29 cents in 2012 to 38 cents in 2013, representing a 31% increase over the previous year. On the operations side, we were able to reduce our combined ratio, a key operating metric, from 83% in 2012 to 77% in 2013. The company recorded growth from its gross written premium of 11% over 2012, reaching a record $111.5 million. Our property and casualty business increased by $13.9 million, or 18%, growing from $76 million in 2012 to $90 million in 2013. Similarly, our life and health line of business also grew, moving from $16 million in 2012 to $21.6 million in 2013. Despite these encouraging results, we were below budgeted plan in property and casualty, as well as the life and health lines of businesses. Barbados as a whole continues to be severely affected by the economic crisis experienced by its major trading partners, which clearly has had a ripple effect on our customers and their capacity to maintain or expand their business with us. Domestically, there was a weak economic performance in the key export sectors, together with significantly lower foreign capital inflows, which have constrained the prospect of economic growth in this country. This weakening has placed pressure on the country's foreign reserves, which necessitated significant policy adjustment and led to fiscal consolidation and increased taxation. Despite this, we continue to have a positive outlook and are constantly looking for ways to increase our efficiency and effectiveness. During 2013, we assessed our operational infrastructure and implemented a number of changes which will have a positive impact moving forward. We improved the efficiency of our broker units by repositioning our underwriting and service areas. We took a very inclusive approach to strengthening our relationship with our broker partners while keeping foremost in our minds the interest of our policyholders when various operational decisions needed to be made. We sought to increase our visibility image at all levels in the market so as to increase our quoting activities and expand our customer base for greater strength and stability. Substantial investment was made to improve our policy administration systems, and a number of these strategic initiatives will continue into 2014 and 15 as we seek to enhance our foundation to better position us for the future. However, because of several non-recurring costs, our overall expenses increased, mainly due to the rebranding and technology infrastructural expenditures. As a result, our expense ratio increased from 23% to 25% in 2013. We intend to redouble our efforts to ensure that this important ratio is restored to an acceptable level through greater cost efficiencies and savings in critical areas that will have a positive impact on our business. But despite the positive outlook, as previously outlined, the year has had its challenges. Competitors continue to target our government and direct business, as we're finding that certain predatory practices are escalating in the market. To combat this, We will need to be more aggressive with our sales and marketing efforts to maintain and indeed grow our market share in all lines of business. Apart from our improved financial results, I will now turn my attention to some of the major accomplishments during fiscal 2013 beyond our 35th anniversary milestone. We went through a very successful rebranding exercise to enhance our market presence and to gain a strategic competitive advantage. We continue to enhance our service to our customers by restructuring our general division to make it more customer-centric and broker-focused. We have reviewed and continue to refine our operational processes to make them more efficient. This work will continue into 2014 and beyond as we strive to be more responsive to the needs of our existing and potential customers. As we continue to grow our individual life business, we redesigned and repriced our products using a very structured and comprehensive development methodology to ensure the mortality pricing, expense assumptions, and profitability requirements are more reflective of Barbados. But in order to be successful in our goal to be stronger and more robust, we require a cultural change amongst the people who drive those operational processes. This has been perhaps our most difficult leadership challenge, but we are making progress through attrition, retirement, reallocation of responsibilities, and continually seeking to build on the strengths and talents of our committed employees. Let us turn our attention now to the specific lines of business, starting with the general division. Sluggish economic conditions have caused there to be less disposable income available to discerning customers. We're therefore seeing reduced spending with contraction in some of the major sectors and customers choosing the lowest possible premium options. There's also fierce activity to gain market share in the motor lines of business, which is resulting in extreme measures being used amongst our competitors. The 2013 Atlantic hurricane season was the least active season so far this century and amongst the quietest on record since 1950. No hurricanes were rated Category 2 or greater in the Atlantic Caribbean or the Gulf of Mexico. This is the first year without a Category 2 or stronger hurricane in the Atlantic since 1968. As a result, we've seen a decline in property claims. Our motor claims have also shown a decrease, giving us an overall decline in this division of 13%. Unfortunately, there were 2 fatalities occurring in Q4, with 3 overall for the year. In the life division, our business continues to grow. Our annualized premium income grew by 45% over the same period in 2012. Our group health business grew by 48% from $13.3 million in 2013 compared to $8.98 million in 2012. As our claims ratio remained very high, we continue to work with all our customers to bring that ratio down to an acceptable level. A very important ingredient to the continued success of our business is our support services. We recognize a number of employees as part of our rewards and recognition program, Shine Bright Like a Diamond. The Diamond Award and the 2013 Employee of the Year went to Mr. Glenn Roy Davis, and the Employee of the Quarter, Q4, went to Ms. Latoya Best. Our growth and development will depend on large measure to the loyalty, commitment, and dedication of our employees, who must continue to work diligently to exceed expectations of all of our stakeholders. We have and will continue to heavily invest in training and supporting our employees to help us achieve our goals. Succession planning and the development and implementation of a mentorship program will be important elements of our human resources development strategy moving forward. Our corporate social responsibility program continued in 2013 with the maintaining of our relationship with the Asthma Association of Barbados through our annual 5 and 10K walk and run to raise funds to assist this important organization. During the year, we were able to attain our Green Business Certification, and it is our plan in the near future to make more efficient and effective use of alternate energy sources to reduce operational costs while we support our fragile environment. Looking to the future, we expect that the coming year will be equally or even more challenging than 2013. We will continue to seek ways to maintain or increase our market share through positive marketing strategies, creativity, and innovation. We will make greater use of technology to increase efficiency and effectiveness in the organization as we implement and utilize the systems we have been investing in for the past few years. Continually enhancing our customers' experience, exceeding their expectations, and delivering products and services to meet their needs is a prerequisite to achieving our key financial goals, driving profitable growth, and improving our return on equity. To accomplish these goals require that we change the way we work as well as our culture and the mindset of our staff and management. We're on our way, and I'm very proud of our accomplishments this year. I'd like to take this opportunity to sincerely thank our shareholders, our chairman, Mr. John White, our parent company, BF&M, our board of directors, our staff, our customers, our brokers, and our agents for their support, guidance, and loyalty during 2013, and look forward to a very positive and successful 2014.